If the S&P 500 loses just 15% in a single week of 2026, 90% of retail Forex traders will blow their accounts trying to catch the falling knife. Let me show you how the disciplined ones are already positioning. My name is Harry, and today we are looking at a realistic U.S. stock market crash scenario and the defensive Forex and gold plays that actually work when liquidity disappears. First, the setup. We are entering 2026 with stretched equity valuations, sticky services inflation, and a Federal Reserve that is boxed in. If growth rolls over while inflation stays above target, the Fed cannot cut aggressively without crushing the dollar. If they hold rates, equities crack under the weight of refinancing costs. Either path creates massive volatility in currency markets, and that is where prepared traders make their year. Lesson 1. In the first leg of a crash, the dollar usually rallies, not falls. Margin calls force global funds to sell everything and buy dollars to cover. So watch the DXY. A sharp break above recent range highs while the S&P 500 is bleeding is your confirmation that risk-off is real. In that window, shorts on Austria dollar US dollar, New Zealand DILA US dollar, and emerging market crosses historically pay the best because commodity and risk currencies get hit first. Lesson 2. Gold is not a hedge on day one. XAUUSD often dips with stocks during forced liquidation, then explodes higher once the Fed signals support. Do not panic if gold drops 3% in the opening sell-off. That is your accumulation zone, not your exit. Plan your entries in advance using weekly support and the previous quarterly open. Lesson 3. The yen and the Swiss franc are your classic safe havens. Long JPY against Austria dollar or Canada D tends to work brutally well when volatility indexes spike. But size small because these pairs can gap on weekends when policy headlines hit. Lesson 4. And this is the one that saves accounts. Cut your position size in half the moment realized volatility doubles. Most traders keep risking 2% per trade in a regime where daily ranges have tripled. That is mathematical suicide. Adjust risk to volatility, not to your confidence. Finally, do not predict the crash. Prepare for it. Build a watch list of 3 pairs and gold. Define your levels this weekend and write your invalidation before you click buy or sell. Conviction without a stop is just gambling with extra steps. If this helped you think clearer about 2026, drop the word ready in the comments so I know to make the follow-up on exact entry triggers for XAUUSD next.